Well, good evening, everyone. Welcome back to the channel. So I'm taking a break from our series that we've been on with the high dividend payouts to discuss a really big news story that started developing Friday, where Silicon Valley National Bank went belly up. And now we're seeing some developments reminiscent of 2008. And I often talk a lot on this channel about how I hope that 2008 and '09 never repeat again, but we are seeing some developments very reminiscent of that, unfortunately. So I'm going to share a Yahoo Finance article here, and we will discuss this now. So what happened? Silicon Valley Bank is basically the bank of all the big tech companies, and so they became insolvent Friday. There was a big run on the bank, and they didn't have the money to meet all the depositors' withdrawals. And now, over the last 2 days, there's been a lot of concern about massive fallout from this. So the government is now guaranteeing all deposits from Silicon Valley Bank and monies to be available Monday. And this is very reminiscent of the bailouts that happened in 2008. And oddly enough, one of the key people on the board at Silicon Valley Bank worked for Lehman Brothers, which was one of the big companies that went bankrupt in 2008 when the Treasury Department did nothing really to save them. And it was like a domino effect from there where the rest of the market just kind of went into free fall. It caused massive shockwaves throughout the economy, took us into a very deep recession, very deep and very painful recession. But right now, it looks like these deposits have been guaranteed. So the article says, financial regulators said Sunday night depositors of the failed Silicon Valley Bank will have access to all of their money starting Monday, March 13th, while announcing new facilities to backstop deposit withdrawals across the banking system amid fears of contagion following SVB shock failure last week. So there were concerns developing over the last 2 days of this weekend that this could spread like a contagion to other banks. And the stock for this bank obviously dropped massively. So again, for those of you that don't know, Silicon Valley Bank, basically most of the big tech companies have a lot of their money, their cash reserves in Silicon Valley Bank. Like Roku, I read that they had like 500 billion or something like that. Or was it might have been 500 million in Silicon Valley Bank. Let me look at that real quick and see if that's under their ticker symbol. Yeah, 26% of Roku's cash reserves are stuck in Silicon Valley Bank. It was 500 million, not billion. And then let's see, SIVB. So this stock was just at like 300 and something dollars at the beginning of the year, 333.50 in February, February 2nd to be exact. So we're down 53% from the start of the year. And let's see. Yeah, it's causing the global markets to drop. But oddly enough, after this move was announced by the government, our markets are up tomorrow. Our futures markets are all up for the Dow, the S&P, the NASDAQ, and so on. So let's look at the stock's ticker symbol real quick here, just to look into this. And anyone that did puts on this that happen to know something, I mean, you profited massively from this if you happen to get puts in this on Friday. But yeah, you can see the S&P, the Dow, the NASDAQ, the Russell, all of these markets are way up. So let's see here. Yeah, like I was just saying, we peaked in the stock at 333.50 and completely tanked on March 8th, which was actually Wednesday. I don't know why I said Friday. That was last Wednesday. And it kept dropping since. So we were here, we were at 267.90 a Wednesday. And then by the time the market opened Thursday, we were way down and then just continued to drop from there. So yeah, this is really concerning. I mean, this is eerily reminiscent of 2008. Now I'm going to go to some non-financial sources here because this is obviously spilling into the non-financial sectors. So I'm actually going to go to Drudge Report, which I haven't really been reading too much, but it still has some pretty good headlines. So let's see what we can find here. There's some information about how the Treasury Department doesn't plan to bail out this bank, like what was done with some of the big banks in 2008. It was very unpopular with the American public because it's like the government kind of guaranteeing. There was a saying called "too big to fail." So hopefully we don't have that happen again. But the FDIC basically is guaranteeing deposits from this bank. So the Drudge Report says Janet Yellen vows no bank bailout. Silicon shockwaves, tip of the iceberg, Fed emergency measures. Let's go over that one first because this is a pretty good hub for all the headlines. So the Wall Street Journal is talking about Silicon Valley Bank, Signature Bank depositors to get all their money as Fed moves to stem the crisis. So I believe there was an emergency Fed meeting within the last couple of days, and U.S. regulators took control of a second bank Sunday and raced to roll out emergency measures to stem potential spillovers from Friday's swift collapse of Silicon Valley Bank, backstopping both firms' uninsured depositors and making more funding available to the banking system. Regulators announced that Signature Bank, one of the main banks for cryptocurrency companies, was closed Sunday. So that happened, and then the Fed decided to step in and take emergency action. Officials took the extraordinary step of designating SVB and Signature Bank as a systemic risk to the financial system, which gives regulators flexibility to guarantee uninsured deposits. So that's what happened. That's how they're guaranteeing uninsured deposits. The Federal Reserve and the Treasury Department also used emergency lending authorities to establish a new facility to help meet demands for withdrawals. And that is the Fed's role. The Fed is supposed to be like a lender of last resort to prevent bank failures. That's why the Fed was actually created. Regulators announced the action in a joint statement from Treasury Secretary Janet Yellen, Fed Chair Jerome Powell, Federal Deposit Insurance, or FDIC Chair Martin Grunberg. The group said that depositors at SVB will have access to all their money on Monday, which we mentioned. Now let's go back to Drudge Report here. Yellen says no bank bailout coming, I guess in the same joint meeting they had, while the government moves to stop potential banking crisis. The U.S. government took extraordinary steps Sunday to stop potential banking crisis after the historic failure of Silicon Valley Bank. In a sign of how quickly the financial bleeding was occurring, regulators announced that New York-based Signature Bank had also failed and was being seized on Sunday. At more than $110 billion in assets, Signature Bank is the third largest bank failure in U.S. history. This is eerily similar to 2008, I have to say. I was really hoping and praying that no such thing would happen again, but I mean, there's some very eerie similarities. Different more up comments in the banking system. The Treasury Department, Federal Reserve, and FDIC said Sunday that all Silicon Valley Bank clients would be protected and able to access their money. They also announced steps that are intended to protect the bank's customers and prevent additional bank runs. Now, I think what happens, so the Fed steps in and basically guarantees these deposits while they sort things out. So it's going to take probably months to sort all this out and trace the money back. But keep in mind, like in the Madoff situation, they recovered like over 90% or maybe even 95% of all the money, which is very remarkable. And it's a good thing that is often underreported. So this step will ensure the U.S. banking system continues to perform its vital roles of protecting deposits and providing access to credit to households and businesses in a manner that promotes strong and sustainable economic growth. Under the plan, depositors at Silicon Valley Bank and Signature Bank, including those holdings who exceed the $250,000 insurance limit, will be able to access their money on Monday. In a separate move, the Fed late Sunday announced an expansive emergency lending program that's intended to prevent a wave of bank runs that would threaten the stability of the banking system. Fed officials characterize the program as akin to what central banks have done for many decades, lend freely so that customers would be confident that they could access their accounts whenever needed. Let me do a search here for the word bailout. Bailout. There's the word bailout. Let's see. I thought that's the article that I was on. Close this out. Let's see, maybe it's down here. Anyway, so Janet Yellen, the Treasury Secretary, vows no bailouts for the bank. They're just going to step in and ensure the deposits, basically. So that's good news, hopefully. We'll see how this goes. But hopefully, this could end up being a good thing, actually, if you want to put a positive spin on this. Maybe this means if the market starts to really tank, the Fed may reverse course and actually start cutting interest rates. This could be the catalyst for that. So, who knows? This could end up being a good thing. Here we go here. Yellen described rising interest rates, which have been increased by the Federal Reserve to combat inflation, as the core problem for Silicon Valley Bank. Interesting. Many of its assets, such as bonds or mortgage-backed securities, lost market value as rates climbed. Mortgage-backed securities were a big thing in 2008. And see, the thing with that, back before 2008, the Fed was also raising interest rates because we were in a expanding economy at the time. We had like 5 or 6 years of economic expansion at the time. So that's very interesting. The rising interest rates, she's saying, is what caused this. So the Fed could very well reverse course. This could be a very interesting catalyst for the market. So hold your pants and stay belted into your seats for the next 6 to 12 months, because things could get interesting here. We could actually see a reversal in Fed policy over this. So anyway, that's pretty much all I had to say about that. That's the big news story right now, and I thought I would cover that. We'll return to our regular series about the top dividend investing funds, hopefully tomorrow. So thank you all for watching that. Please remember to like, comment, and subscribe. Thanks again, and take care.